Did you know that you don't have to keep your strategy complicated to really make money in the forex market? I've seen a lot of people ask me to teach them strategies that are complicated, advanced strategies, thinking that learning how to trade with such advanced strategies is what makes money in the forex market. But what if I can tell you that one of my best strategies in the forex market is so simple and straightforward that anyone can actually trade? Even if you're trading for the first time in the forex market, you can actually come on your chart, look at what is happening, and carefully do your analysis to be able to take a trade. And that is what trading is all about. You don't need to do complicated stuff to make money in the forex market. And in today's video, I'll be showing you one of my, in fact, this is one of the most straightforward strategies you're going to find out there. And right here on my screen, you can see I have an area where I will normally take a trade if I see a setup. Now, I advise that you mostly do your analysis from top down. When I say top-down analysis, is basically you go into the higher time frame, look at what is happening on the higher time frame, and then drop down to the lower time frame where you will finally take the trades and make the decisions on the lower time frame. Especially those of you who are trading intraday, this is the best way to approach the markets. So coming right here, let me show you something. Can you see this price action here? This price action here is from the daily time frame. Now, if you are in the category of people who want to trade from the weekly, daily, and then activate or take trades on the 4-hour, that is basically their top-down analysis triad. I call it top-down analysis triad, where I have two types of traders, where we have the traders that start from the weekly and then drop down to the daily, then they take their trades on the 4-hour. The second category is those ones that start from the daily time frame, all right? They drop down to the 4-hour, and then they take their trades on the 15 minutes. This is the top-down analysis triads. I call it top-down analysis triads. This is it, basically. So, if you are in the category of these people or this one, just stick to the time frame series, all right? Don't complicate anything. And when you're doing top-down analysis, make sure you do market structure delineation differently across different time frames. So here it is. I have this guy. This is on the daily time frame, and I had price move all the way up here, creating this high, which is a buy side liquidity. If you can mark it correctly, that is a buy side liquidity. Don't be lazy. Make sure you mark out everything that is supposed to be clearly defined so that you will know what is happening. On the daily, we have this, and we have this retracement, another push up, where we have price crashing below here, where we have the market structure shift. A market structure shift is going to introduce a new directional movement. So the reason why we have market structure shift in the market is because we are going to see a new directional movement. Now, right here, we have a market structure shift, and then price started going in an opposite direction. Every time you see a market structure shift, just like this one, you will see a new directional movement, a market structure shift and a new directional movement. So coming back to this particular area, we're going to look at it. Now, there is something I call a dealing range. The dealing range is basically where you're going to make your trading decisions within a particular data that you have. Right here, if I take out this guy, let me show you this. If you look at this carefully, maybe you are about to take a trade, and this is your dealing range from here, this area to this area. That is your dealing range. You will always have your dealing range from a swing high to a swing low, or from a swing low to a swing high, and that is how you're going to see your dealing range. Here we have a swing high. If I put my fib levels to this place, now this is how we take trade. You have the high and the low. What you should do if you're taking trade is that you don't make decisions to take trade in the discount area of this Fibonacci tool. You will only take trading decisions when you finally see price trade into this guy, and that is when you will take your trading decisions. So this is a sell side liquidity resting below, and right above it is a buy side liquidity, and that is how you can mark out this area. So the next thing to do is look for the institutional reference points that price may be attracted to. Here is the magic behind this. In every dealing range, you're going to see imbalances. Imbalance simply means fair value gaps. For this one, we have a bearish order flow, and I have a bearish fair value gap, simply known as sell side imbalance, buy side inefficiency. I have one here, I have another one here, but then aside from that, I also have a bearish mitigation block. Now, this area becomes our area of interest. Area of interest. I don't want you to call it a point of interest. This is area of interest. So the entire area becomes area of interest. Interest for what? For selling. But then where there is confluence between this area of interest and this imbalance becomes a high probability area where price can easily reverse. Now, this is it. If you look at this, we have this area of interest. We have another imbalance right above it. Which one is price going to use? That is where the magic comes in very, very handy. Now, it is from here that we will look out for the lower time frame. That is the top-down analysis triads. All right. So we can drop down to the 4-hour time frame and see what price will do with the imbalance. All right. If price gives us a shifting market structure on this fair value gap, then that is the one price is going to use for the sell. Remember, shifted market structure comes in with a new directional movement. This is a bullish market. From here on the 4-hour now, from the daily to the 4-hour, we have a shifting market structure establishing a bullish movement. We need to see a shifting market structure for the price to start a bearish movement. If you don't understand that, you need to go to my book, and that is where you're going to see all the things that you're supposed to see. I have a book where I explain almost everything so easily and straightforward. This is the book. It's called the Smart Money Accelerator Guide. It only costs $9.9. The link is in the description of this video. I've explained all this approach in this particular book. A lot of testimonies have already reached me from this book. Get the book. The link is in the description of this video. The first link there is where you will have access to this book. It costs $9.9. If you're not able to buy it there, let me know in the comments. You can simply reach out to me through my WhatsApp contact. So coming back here from the 4-hour time frame, we're going to look at this area, this particular area. We want to see shift in market structure. Now, the 4-hour, if you are not doing swing trading, the 4-hour sometimes is difficult to track a shift in market structure for an intraday trader. So I will advise that in between that, you can either use 1-hour time frame or the 15-minute time frame if you're trading intraday. I mean, if you're trading within the day, because the 15-minute time frame can easily show you the structure of the market. So if we try the 1-hour or the 15-minute, you will get to see what you're looking for. So here, let's see. I am seeing price action. I am seeing price action. Yes, this is it. Price action came in, touched into the fair value gap. Now, if price was not willing to give us the sell opportunity, it will easily trade above into this guy and give us a shifting structure. You now see we have a complication. We have two fair value gaps. Then price gave us the one it wants to use right at the area of interest. I hope somebody learned something there. I don't want to go deep into explaining that. So here, this is a shifting market structure. Bearish. Market structure shift, bearish. And what do you have there? A bearish mitigation block. That is the area of interest for the lower time frame. So if you are taking trade, where are you going to target? Here for the short, here. And your stop loss is going to be here. And your target is going to be the opposing liquidity. It's as simple as that. Very simple and straightforward. You look for the higher time frame. What the higher time frame is doing, dropping down to the lower time frame. And here is an opportunity to take a trade. If price never comes here, let it be. Keep it as strict and simple. Now, here it is. Look at it. Price is coming back. Price is coming. That is it. You are in the trade. If price is coming, sometimes if you can allow yourself the luxury, sometimes I will advise people to don't be too stingy with your stop loss. I can even go above the fair value gap. Now minimize your risks through the lot size you'll be taking the trade from. If you are taking a trade that is more than 1% of your account, especially if you're managing a huge amount of money, then you are making a mistake. So price now took me in, and we are going to go in that direction. Let's see how price will behave. Are you seeing what is happening? I'm going to show you how to do continuous trading, or maybe trend continuation trading, but this is just the simplest pattern you can use for taking trades. I'm going to show you what I expected from Euro USD just today, but then it never gave me an opportunity to take a trade. You see all the things happening. This is it. I hope you've seen how price reacted to this environment, and here we have price doing all this. If you can hold on to this, you will be able to take advantage of this. If it was me, honestly, I can tell you, I would have gone out of this market from here. Yes, I would have gone out. And the moment price took out this, I will have moved my stop loss to break even. I'm telling you a sincere truth. So if you are careful and if you are confident, especially if you're trading intraday, I don't have the patience to wait for my trade to go all the way to the next day. So that is basically what I am showing you. You can allow your trade if you have the patience, but somebody like me, I will have long gone out of this market from here. Yes, there are trades I take and they give me just one risk ratio or maybe 1.5, and then I take my profit, and I'm very okay with that. So here it is. Can you see this? That is what you get to see from that. So let's go back to the trade I was expecting today on Euro USD. I shared this with my community quite earlier. Unfortunately, the trade did not mature. Yes, here on the 4-hour time frame, I was expecting to see something happen here. Oh, here. Let me show you. Let me show you. Beautiful. Here it is. Can you see this and call this a shifting market structure? I mean, a break of structure as price goes bearish and price retraced from here up to that area. So this is your dealing range. Mark your dealing range. And what do? You expect price to trade to bullish area. Right around this area, I was expecting price to give me the shifting market structure. In fact, around here, this is the area of interest. I was waiting for a shifting structure throughout today. On the 15-minute time frame, I was waiting. In fact, I was looking at this guy here. I thought price was going to give me the shifting structure here, but unfortunately there wasn't any shifting market structure here. If you don't know what a shifting market structure is, you need to go back or subscribe for my mentorship. The link is in the description of this video. Check the link right there. You will see the Early Traders program where I teach most of these things in detail. So this is the shifting market structure, but unfortunately it never gave a shifting market structure. Price quickly went above. So I wouldn't have gotten stopped out because I didn't take the trade without a shifting structure to give me a confirmation for an entry, and price went all the way up there. We never had any shifting structure. We are still struggling with this area. This is not a cool shifting structure. There is no momentum or displacement for that shifting structure. So I don't want to put myself in that kind of situation. So this is one of the things that keeps you safe. If I have had a shifting structure here and price retrace, I will have taken this trade down. As simple as that is one of the most powerful strategies you can use for entry. Guys, if you have any question, let me know in the comments, and then I'll be right there to respond to your questions. Thank you very much for staying to the end. I appreciate all your efforts. See you when I come your way next. Thank you.